Today, we're talking about a big, ambitious topic: how to build a $20 million net worth. Now, that number might sound intimidating or arbitrary, but don't worry, I'm going to break it down into clear, actionable steps that can put you on the path to serious wealth accumulation. Welcome to Personal Finance Cat, where I share my personal take on personal finance. Why $20 million? Well, the number actually doesn't matter. The principles that I'm going to talk about will be helpful no matter what your number is. So, without further ado, let's dive in. Number one, the wealth mindset. Before we get into the how, let's talk about the why. Building a $20 million net worth takes more than just picking the right investments or knowing all the financial lingo. It's really about developing the right mindset. People who reach this level of wealth are thinking long-term. They are setting goals 10, 20, or even 30 years into the future, and they are comfortable taking calculated risks to get there. It's also about understanding your personal motivation. Why do you want to reach this goal? Is it for financial freedom? To build a legacy? To give back? Knowing your why can give you that extra drive to stay focused, even when things get tough. And trust me, they will get tough at some point. Number two, establishing income streams. All right, let's get practical and talk about income streams. If you're aiming for a high net worth, one income stream likely won't cut it. Millionaires, on average, have 7 income streams. So let's discuss some options that can help you diversify. Some of the big ones are real estate investments, stock portfolios, business ownership, and passive income from things like royalties or dividends. Real estate is a popular choice because it provides cash flow and appreciation over time. Stocks are also excellent because they give you ownership in companies and can grow through dividends or stock price increases. Now, if you're looking to speed up the process, consider building an online business or investing in digital assets. These tend to be scalable, meaning you're not limited by the hours you can work. Remember, time is finite, but with the right assets, you can start earning passively. Number 3, strategic investing. Let's talk investment strategy. If you want to reach that $20 million mark, you will need a diverse portfolio. You don't want to put all your eggs in one basket. For those just starting, index funds are a great foundation. They are low cost and give you exposure to the entire market. But as your wealth grows, you can explore more advanced opportunities like private equity, venture capital, or real estate syndications. And as you start to accumulate wealth, managing risk becomes crucial. You might look into investments like tax liens, which can provide high returns, but require a solid understanding of the legal side. The goal is calculated risk, building a balanced portfolio that includes both high-risk, high-reward assets and more stable, income-generating ones. And one more thing, whatever you invest in, take the time to learn about it. Whether it's real estate, tax liens, or a business venture, understanding the ins and outs is key to avoiding costly mistakes. Number 4, smart debt and leveraging assets. Now, let's talk about debt. A lot of people think of debt as a bad thing, but if used wisely, it can be a powerful tool for wealth building. Many wealthy people use debt to fund investments and grow their assets more quickly. Take real estate, for example. You can use a mortgage to buy a property, rent it out to cover expenses, and maybe even turn a profit. Over time, the property appreciates, and your tenants help pay down the mortgage. This lets you grow your assets without having to use all your cash up front. This concept goes beyond real estate, too. Business loans, for instance, can help you scale your operations or launch new projects. The key is to ensure that the returns you get from your investments outweigh the cost of the debt. Number 5, tax strategy and wealth preservation. Once you've built a significant amount of wealth, you will want to keep as much of it as possible. This is where a solid tax strategy becomes essential. No one likes taxes, but understanding tax-efficient investment options can save you a lot in the long run. For example, you've got options like Roth IRAs, where investments grow tax-free, or real estate, where you can benefit from depreciation. If you're a high-income earner, you might also consider strategies like tax loss harvesting or even setting up a trust to manage your wealth effectively. And honestly, working with a financial planner or tax advisor who understands your goals can make a world of difference. Number 6, long-term planning and legacy. Finally, as you grow your net worth, think beyond just yourself. Building wealth is about more than accumulating money. It's about leaving a legacy. This might mean setting up a family trust, creating endowments, or even engaging in charitable giving. The goal isn't just to accumulate wealth for your personal benefit, but to create opportunities for others, and maybe even make a positive impact on society. And when you start looking at wealth in this way, it gives purpose to all the hard work you are putting in. Well, that wraps up today's episode. I hope these insights inspire you to start or keep pushing forward on your journey to a $20 million net worth, or whatever that number might be. Wealth building is possible with the right strategies, a long-term mindset, and a commitment to learning as you go. If you enjoyed today's episode, please don't forget to subscribe and share it with anyone who might find it valuable. Thanks for tuning in. And until next time, keep investing in yourself and your future.